We got some massive news this morning for Apple stock investors as President Donald Trump threatened Apple with 25% tariffs if Apple doesn't manufacture its iPhones in the United States. I'll talk about the details. I'll share the details of that statement with you and talk about what those details could mean for Apple stock investors.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
And so here's the quote from President Donald Trump saying, "I have long ago informed Tim Cook of Apple that I expect their iPhones will be sold in the United States of America will be manufactured and built in the United States, not India or any place else," Trump wrote on Truth Social. If that's not the case, a tariff of at least 25% must be paid by Apple to the United States. Now, Apple stock price fell, but it's unclear whether Trump can target individual companies with tariffs. But the president has not been shy about attacking corporations that are trying to sidestep the intent of the tariffs. The intent of the tariffs is to make the United States a more powerful manufacturing base and to bring manufacturing back to the United States. It wasn't so that companies can shift production from one country to another, which is what Apple was planning on doing. Apple told investors that it was primarily going to shift production from China to India as a way of sidestepping the tariffs. It was going to increase production and assembly inside the United States as well, but the bigger move would have been from China to India. And that's what the company talked a lot about in their conference call with Wall Street analysts, because Wall Street analysts were very interested about how Apple was going to respond to these tariffs. And so Apple's planned response is now under threat by the president of the United States saying that, look, we're still going to charge you a tariff of at least 25%, no matter where you try and move your operations outside of the United States. So this whole strategy that you've benefited from by designing your products in the United States, using the United States consumer as a seller, as someone to sell to, and then sending out all the jobs, all the assembly outside of the United States to countries like China, Taiwan, and India. And the United States president is not happy about that. And so threatening Apple here with a tariff of at least 25%. If you look at Apple's most recent results and you look at the profit margin of the products that it's selling, and you do this because you want to evaluate if the company has room to pay those higher tariffs and still be profitable for investors. And so that's why I look at this metric here. Their product sales totaled 68.7 billion in the quarter which ended March 29th, 2025, which had some tariff impact included, not all tariff impacts included just yet. And their margin, their cost of sales was $44 billion. So out of the $68.7 billion that they sold, they made roughly $24.7 billion in gross profit. That's good for a margin over 1/3, over 33% margin on their product sales. So if you can imagine, their product cost would have been 25% higher in this current quarter if we just apply that 25% that President Donald Trump threatened. Just, this is back of the envelope math. The threat was on iPhones specifically, and so I would need to go and take out how much of the iPhone revenue specifically made up the total of its product sales and apply the 25% to that part of its product sales to get more precise. I'm not doing all that here. I'm just going to add 25% to the cost of its product sales in the most recent quarter, which would increase its cost of product sales to around $55 billion. And their net sales, even if they didn't increase prices in response, would be 68.7 billion, which would mean that it would still generate a gross profit of $13 billion. And then on top of that, of course, they generate billions of dollars in profitability from their services segment, almost more so than their product segment, because the services segment is so much more profitable for Apple. Apple would be an attractive company to investors if they sold all their iPhones at cost. At cost, meaning they make zero gross margin on iPhones. That would still be an attractive business to investors. Now, at a much lower price, but it would still be an attractive business because they break even on the iPhone sale, but then they profit 70% on every incremental sale that's generated on that iPhone that the consumer will likely use for the next 2 years, maybe even longer, right? Probably even longer. So when they add a subscription to Apple Music, or if they spend time browsing on the search engine and buy something and use Google, and thereby Google pays Apple $20 billion, $10 to $20 billion annually for the rights to be that search engine. So Apple can profit from iPhone sales meaningfully, even if they sell those iPhones at cost. So even if they were to pay those 25% tariffs, they would have had to pay those 25% tariffs, the business will still be a good business. Not as good as before, of course, because now their margin will be slimmer, but still a good business nevertheless. So understandably, the stock price should have declined as a result of this news, and it did. I would have thought the price should have declined even more than it did. It was only down roughly 2% following this announcement. And given that nothing is, for sure, but the risks are elevated now. And then on top of this news, President Donald Trump also talked about a flat 50% tariff for the EU, signaling that discussions with the EU on a new trade deal haven't gone well. And so for weeks now, the market has been rallying on the back of easing trade tensions, right? We had the deal with the UK, and we had the pause of the reciprocal tariffs on China. So for weeks, the news has been very positive on the trade front. And today it turned quickly, sharply, and it should be reflected in these valuations now. And as I've said, to come into 2025, I did not have Apple stock rated as a buy, and I don't like Apple stock right now. I like it even worse than I liked it to start the year, and I already had it rated as only a hold, and I like it even less here today after all of the news that's come out since the start of the year.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.